In this video, I'll be testing 100 times, can you simply use Wick's rejecting out of the 50-period exponential moving average as a strategy with the trend direction in mind. So for an uptrend, when price is over the 200 EMA and we see a wick going through the 50 EMA, coming down through it and rejecting off of the 50 EMA, that's a buy signal like we see here and we see here. I'm going to be testing this 100 times in a row to see if this is in fact a profitable strategy over a series of 100 back-tested trades. So let's talk about the indicators being used, the risk to reward ratio, stop loss placement, take profit target, and then get into the 100 test and talk about the results at the end. So covering the indicators, we first have a 200 period exponential moving average, as you can see here, and a 50 period exponential moving average, as you can see here. For the stop loss indicator, I'm going to be using a standard ATR based stop loss. It's called ATR stop loss indicator by Edgar_Tran_TR. And I do have the settings changed. So let's take a look. We have the ATR length set to 14 and the multiplier set to 1. I have also changed the color a little bit, but that doesn't really matter or change anything about the strategy. So what is the exact strategy? Well, I'm going to be looking for times where we have an uptrend, and that means price is over the 200 EMA, then price comes down and wicks through the 50 period exponential moving average. So right here, we see price come and pull back, wicks right through the 50 EMA, and closes above the 200 EMA and above the 50 period exponential moving average as well. That's going to be a buy signal at the close of that candle, the stop loss placed to the stop loss indicator, and then using a 1 to 1.5 risk to reward ratio for the profit target. And again, we see over here, price pulls back into the 50 EMA and wicks through it. Then upon the close of that candle, that is the entry, using a 1 to 1.5 risk to reward ratio with the stop loss at the stop loss indicator. That is the trade setup. So let's take a look at a few more examples, including some shorts, and then get into the 100 back tests. All right, so here's a couple examples of short trades. So for a short, price needs to be in a downtrend, meaning it's under the 200 period exponential moving average. And then we need to see that price wicks through the 50 period exponential moving average and then closes below it. So one example right here, we have the wick through the 50 period exponential moving average, and then upon the close of that candle, placing that stop loss to the stop loss indicator and using a 1 to 1.5 risk to reward ratio for this short trade. This one does end up being a winner. Next, we have another one where we see price push below the 200 EMA, then pull back and wick through the 50 period exponential moving average. Stop loss goes to the stop loss indicator, and then using a 1 to 1.5 risk to reward ratio, we see this trade setup play out as profitable. We can move on and find the next example down here where we see price again pulls back into the 50 period exponential moving average while being below the 200 EMA. We see the wick through, it closed below the 50 EMA, and that's another entry signal. Stop loss to the stop loss indicator, and then targeting 1 to 1.5 risk to reward ratio. This one ends up being a winner. So let's test this 100 trades in a row and see if it's actually profitable over a series of mini trades. And again, this one with 100 back tests, just like any, is not statistically significant, but these videos are purely for you guys to kind of get ideas about creating a trading system and see what might work and what might not work. So let's get into the 100 test with that being said. All right, results are in after the 100 back-tested trades. This was tested on euro against the US dollar on a 15-minute time frame using a 1 to 1.5 risk to reward ratio. It took 2 months of price data to find the 100 back-tested trades, and out of those, there were 48 winning trades and 52 losing trades. The most winners in a row was 5, and the most losses in a row was also 5. The gain on the account, 20%, and that's assuming a 1% risk of account equity per trade and also not compounding. So this one performed pretty medium level. It did pretty well, and it does show profitability over a series of this 100 back-tested trades, so it is promising. It doesn't mean that it will stay profitable forever. It does need a lot more testing to be confirmed, and it also needs to go through forward testing. So you never know that something that you backtest is going to perform profitably going forward. Every set of price data will be different, and 100 backtested trades is not statistically significant, so just keep that in mind with any of these tests. These are purely for you guys to get ideas about creating a trading system of your own, so you can kind of see what works and what doesn't and what might make a good part of your trading system. You can always add additional factors and also additional trade management into any of these strategies, so that is to be recommended. Although let's move on to the strategy ranking spreadsheet and see how it stacks up against other tests. All right, here it is, falling at spot number 69 out of the 93 strategies tested on the channel so far. So falling in that kind of mid to lower tier with the strategy ranking spreadsheet. But this one did only take about 2 months of price data to find these results. So I would say that this one is quite promising, especially with how simple it is. You can add in additional factors to improve results and add in additional trade management to also increase the win rate or the gain on the account figure. The 1 to 1.5 risk to reward ratio is not the end all be all. This is just a simple test to give you guys ideas about creating your trading system. So don't take it as this is the only way to trade with this strategy. You can add this in as part of a trading system, and it's essentially just a basic idea that you can kind of get and see how it performs. If you had done this, this is what the result would have been, and it's interesting to see what works and what doesn't. So that's going to cover it for this video. Don't forget to like the video, comment down below for the YouTube algorithm, and subscribe if you haven't. Also, don't forget, check out the affiliate links in the description down below along with my Patreon page. Thank you guys for watching, and have a great day.